Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting after 2 weeks of gap the Asian session live market analysis for this particular week, 28th January to 1st February 2013. So it is the last week of this particular month of Jan, and the next month starts in this particular week. So whenever you come across a week of this nature, the market is expected to bring in much more volatile moves. So I'll be discussing more about it during this particular webinar on 28th Jan between 5 and 5:45 GMT. I am now presenting it. Let us look into that of the live market code page. Here in the live market code page, you find the 4 majors and the 2 commodity pairs. And now you will be able to understand how the players are making the moves in the market. Euro has gained after prolonged lower level consolidation around 1.33, 1.32, 50 they just showed very frequently and created the bearish feel, and then subsequently they just gained that level to 1.3450 level. So from that of Friday close, it has gained about 8 pips, currently trading around 1.3459. Then, so this was in line with the expectations of the forecast. But in the case of GBP, which was trading around 1.6061 area, which has made a drop in order to make a very big rise in the case of Euro GBP as an upward extended stop and move around 0.8550 area. So from that of 82-83 area, when people expected the downward move, the players bought all and just made an extended upward move in the case of Euro GBP, and as a result the traders have to forcibly close the positions, but actually the players are building the sell positions holding at the higher level. And similarly in the case of Euro CHF, I was telling you when it was trading around 1.21 or 20 area that they wanted to take it to 1.25 area, they have just taken it. And further upward 1.30 we should be able to see very soon. How it is possible? By making the contrarian move. Now you come across the Euro is showing positive net change and GBP is showing negative net change. But last week, whole of last week, they have been holding low and inducing the long holders in the case of GBP to liquidate, but their main objective was to gain levels in the case of Euro GBP where the pip value is much higher than that of Euro or GBP. As a result, the traders who had taken the positions will be losing more in the case of the cross Euro GBP, and there the players did not mind making a drop, and they are given the impression that UK economy is not that good when compared to European economy. You know, the same currencies about 2-3 months back, people are telling that UK economy is much more stable when compared to that of the European economy, and they made the moves of that opposite, that is gaining more in the case of GBP. When Euro was making a big drop, GBP was simply holding. Now when Euro is just gaining the levels, GBP is lacking behind. But this week we will come across that GBP compensate all the losses and gain aggressively. So you know very well that they don't continue to gain the levels in the single currency for more than 2 weeks. So they will try to consolidate in the case of Euro, and when Euro is gaining more, then the people will try to buy when there is a dip technically, and then the players may not give profit there, but they may simply gain the levels in the case of GBP. Because in the case of in FXtrade.net, I have seen a lot of discussions going on with regard to the yen crosses, Euro yen and GBP yen. Many traders enter into the buy positions in the case of GBP yen thinking that it will make a massive rise. but they have been holding it and simply gained the levels substantially in the case of Euro Yen. Then when people realize that Euro Yen is going to give a promising result and try to jump into that, they will simply gain the levels in the case of GBP Yen. So this is the way they play with it of the traders. They create the market sentiment and act against it of the traders. We have to keep it in mind. When the move becomes visible, they don't give profit. So when people become bullish, they don't give simply the profit to the long holders. When the market becomes or appears bearish, they don't simply give the profit to that of the short sellers as well. So in both the cases, they try to use their techniques of stop ins and other moves. As a result, they try to grab the money from that of the traders. And with regard to USD Yen, they have been consistently gaining the levels, and it was trading around 88 last week, and week before 87 they just showed it, and then subsequently they started gaining the levels to 91 area and continue to gain into 93, 95 area. And as I explained many times, that USD Yen is expected to make one-sided gain. Because of that, Euro Yen and GBP Yen are gaining it, but the numerator currencies in them, when they don't gain substantially, like the Euro as a numerator currency in Euro Yen and GBP as a numerator currency in GBP Yen, then you find that Euro Yen has gained about 29 pips, whereas GBP Yen has just lost about 1 pip. So when both the numerator and the denominator, when they rise, then there is a great potency for them to rise. Simply if you think that I find Euro Yen is the best pair to trade and continue to trade, then you may not be able to make money. So you have to identify which currency pair they are handling at a given time, and then try to enter into that particular currency. You will be able to really get the profit. Simply holding some currencies, if you try to enter, they will be testing your patience. Then another important contrarian move you come across is Euro USD is in positive net change, and USD CHF is also in positive net change. Because of that, they have been continuously rising Euro CHF. So they are handling the yen crosses as well as the European crosses substantially. And also they have the decisive moves in the market. How they have been able to drop GBP so much? They found that plenty of traders are holding long positions in GBP, and also plenty of traders have taken sell positions in Euro GBP cross. So by making a move of this nature, they are able to earn much more than that of the losses what they could incur in GBP pushing it downward. So this is the way they make decisive moves, and their billions of dollars can only multiply and will not deteriorate. So they don't take any chances. Unlike the traders take the gambling tendency or show the gambling tendency, try to take chances and try to use the trading strategy of limiting the risk. But still, it is only a gambling tendency wherein we try to take chance. Okay, if it goes well, okay, let me earn. Otherwise, let me lose some money on that. So that sort of betting happens in that. Whereas the players don't do that way. They make decisive moves after the traders commit the positions. So they allow the market to move as it goes. Then later on, they have the mechanisms to know whether the traders are long or short. Then they come into the picture and try to suddenly make the moves against that expected trend of the traders. So that is why you always come across the unexpected happening in the market. And nobody would have thought on Thursday that the Friday they are going to make a massive run on the upside and simply hold GBP. So they have done it in an unexpected way. So this sort of unexpected condition brings in surprise. Once a person is under the grip of surprise, he becomes emotional. And once he becomes emotional, he takes wrong decisions. And most of the crimes are made in the world only under the emotional stress, not otherwise. Otherwise, everybody wanted to live as a good human being. But under the emotions, they commit such mistakes, later on they repent. So, including the players, they may repent later. Okay. So, the trading strategy is one wherein we assume that, okay, we have read the market and we are able to understand that how exactly the market could move, and then subsequently we try to see that or have that view that the market can still go against my expectations. So to limit the risk, a simple mechanism is use the stop. And once the position makes profit of 20-30 pips, keep entry stop or stop at the break even. That is the first trading strategy one has to think of. The hedging facility is available, then you can just keep the hedging order to limit the risk. And then try to maximize the profit, the exit. When they start moving the market, the session timings I have given it. Start of the session if you have taken a position. Sorry. Try to close the position by end of the session, because afterwards they will try to make the session change moves and things like that. Before that you can grab the profit and look for another opportunity to take the buy positions again. That will be the ideal way of doing the trades. But when a position is making profit, immediately if you try to grab 20 pips or 15 pips, 10 pips and things like that as a scalper, then you fail to follow the timings of the players. So instead focus on the timings of the players, then try to trade in line with them. You'll be able to see that when you buy a position during session start time, by closing, if you do it, you will be able to get about 50 to 60 pips profit in a single trade. And if the going is good, then if you trail the stop as a trading strategy in a profit making position, trail the limit and maximize the profit. And 2 sessions they continue to make similar moves, as I explained many times, as an intentional move. You will be able to really maximize the profit to 75 pips on an ordinary day. If the going is good, then you should be able to make about 150 pips in a single trade. So that should be the objective of. So you should not be under the grip of fear. So if you are under the grip of fear, you will not be able to drive your car anywhere in a public place. No, you have to get rid of the fear. Only then you will be able to drive it. In the same way, if you have to get rid of the market fear, only then you will be able to perceive what the players are trying to do it and try to capitalize the situation. Let me explain to you the expected market moves for this particular week. 28th, that is today, Monday. Swing and slide moves are expected during that of the Japanese session, followed by a dip during start of the European session, and then rise during late European session, and swing and rise moves are expected during US session. Then Tuesday, they could do swing and quick rise moves, and Wednesday, they are expected to make either way volatile moves. So there you may come across that you can only do swing trades either way in the market. And the quick moves are false move in the market. I explained many times. So when they make such quick moves on the upside, stop cutting the new high for more than 30 minutes to 2 hours, take a sell. Then when they drop quickly, you try to buy and close a trade and look for a level wherein they don't cut the new low for more than 30 minutes to 2 hours, take a buy, then you will be able to see book profit on the upside. So you need to have an unbiased observation of the market. You should not become bullish or bearish. Then you will find it difficult to trade in such a scenario during the month end. Many of the traders, the going might be good, they might buy and hold the buy position, and then finally the market might go up and they are able to book profit. Then without understanding that they bring in the trend reversal move, monthly trend reversal move. Sometimes they overcome it during the month end. When the going is good, when the profit is added to that of the equity, then they find, okay, instead of one lot, I can take 2-3 lots so that I'll be able to conquer the world, make a massive profit out of that. So that sort of greed grips in. Then subsequently they find the players make one big volatile move. Because of over trading, the margin call is applied and they close that account and blame the broker and blame everybody without understanding that you have to blame yourself because you indulge yourself out of greed in over trading. So you have to control both the type of emotions. One is the fear, market fear, and another one is the greed. So once you get rid of these two, you will be able to perceive the market objectively and try to see that the players are also traders and they cannot endlessly rise or endlessly drop and they need to book profit. So along with them, let me also book profit and re-enter into the market. Then 31st of January, Thursday, then swing and rise moves during Japanese session, and then subsequently they are expected to make a rise during European and US session. And Friday, from the Japanese session start, they are expected to gain the levels and bring in big volatile moves for that of the new month beginning. The month end and the new month beginning time, they are expected to bring in more volatile move and quick rise on Friday. Then next week, 4 to 8 February, they are expected to make much more aggressive quick rise. Probably you could find that this particular rise will gain momentum. Once the momentum is got, then the people will think that, okay, any level you buy, we will be able to book profit. And that sort of scenario, they will try to make it and make continuous extended move, but actually the market will appear bullish at that time. The players will be exiting out of their positions to that of the bullish traders and induce the bullish traders to overcome it and later on make some corrections from the second or third week of February. Depends upon the building of the buy positions by that of the traders at the higher level, and you know that they will try to do upward stop and very frequently, and that way not at from the current level they will drop. They will make a massive rise to 1.36 or 1.38 in the case of Euro and 1.63 to 65 in the case of GBP. Then later on they will try to make the drop. So don't immediately take sell position and later on tell me that I had taken a sell position, so what do I do? Market is going up. Please understand that the quick drops or the buy opportunities, but you have to see when they are going to stop the drop. Similarly, quick rises or sell opportunity, but you have to calmly wait for them to finish all the selling, and then when the traders become overbought, it is not the players become overbought. When the traders become overbought, they don't even make upward stop end. When they don't make even upward stop end, the traders cannot book profit. Then they start making the drop. So understand how they operate the market. Then you will not simply hold the position and ask various people that what is going to happen in the market, can you tell me what is happening in the market, and this sort of questions you will not ask. From 6 to 7:30 GMT will be the late Japanese session, they will slide. Then afterwards 8 GMT to 14 GMT is the European session. Initially they are expected to make a dip during the early session, 8 to 9:30, then subsequently start making the rise slowly during the mid-session, and quick rise could be seen in the case during that of the late European session. And today you could come across GBP gaining more when compared to Euro. Initially Euro will be gaining because it's showing positive net change when compared to that of GBP. They will gain up to that of the high, make an upward stop and hold, then GBP is expected to quickly gain the levels unassumingly. So that is a way they just reverse. Last week, whole of last week, they have been holding high, making upward move in the case of Euro GBP. So the traders would have developed the bullish field. It could go to 0.868788 or the earlier high and things like that. Then they already built up the sell positions. The short sellers would have done the covering of the shorts with a loss, and you will find that the players just fool the long holders and just start making the slide. Swing and rise moves are expected during the year session. So this week, having month end and new month beginning time, so volatile moves may be seen during this week and with more upward bias. So still you will find Euro and GBP gaining levels alternatively, but still the volatile moves are part of the game. Besides mid-sessions, they will try to do the contrarian moves to handle the crosses, and this time they are very aggressive in the case of crosses because the volume in majors have come down drastically, which shows the type of momentum what you come across in the market. So they try to handle the majors as well as the crosses alternatively in order to earn their money, because they require huge earning. Only then they will be able to sustain after sharing with so many people who try to extend help for their market manipulation. So you have to understand that they are only focusing on profits and not on the currencies. So they can just smash a currency like this or gain the levels in a currency. It is immaterial for them. Ultimately, what is more important? Okay, when I make a move of this nature, will I earn billions? That's what their thought is. So let me go into that of the questions which are asked here. Okay, JP Nambia. Friday is normally day of profit taking, but we saw Euro USD doing. See, that is what. Don't have a notion of that nature. No, if you try to think that every time they will repeat the same story, and definitely market cannot bring in surprise. So always keep in mind, market is bound to bring in surprise. That is why there are so many type of analysis. You find the full content of FX Street is with regard to various type of analysis in order to understand the market. Why all these things? Because nobody find it their method could be perfect in explaining the market. So everyone is looking at the market with a different perspective. So don't have the preconceived idea that they will try to make profit booking move on Friday and things like that. They continue to change it. Euro USD doing a hat trick counting last Thursday to Friday. No, it is not hat trick. I think you have misunderstood. Hat trick moves, the rule, they don't make similar moves for more than 2 sessions, more than 2 days, more than 2 weeks, more than 2 months. You just apply this and see whether it was a hat trick. In wine brown. On a new day, Japanese session, do you use initial low and the high from previous day? No, initial lows and the highs are to be taken only around 3:30 GMT. I think you are talking in terms of your local time. That is why you find that it is Sunday time. But actually you have to take it as a GMT time frame. The day has already started from Japan. So that you have to take at 3:30 GMT. In Srinivasan. What is the difference between slide moves and dip? Okay, slide is an intentional move. They do it pip by pip, a drop. No? Whereas a dip is quickly they drop about 5 pips or 10 pips and stop cutting the new low. Because these moves, otherwise you have to give an elaborate explanations. That is why I wanted to use different terminologies, so that when I say slide, also true meaning of the word slide is also small move on the downside. one pip by pip. And you get this week, can we expect the Euro GBP cross to reverse? Yes. Euro GBP cross is expected to reverse in a very big way. When all traders turn long and when the short covering happened and traders are afraid of shorting it, expecting 0.8687 as the resistance, and they wait for the market to go there to take a sell, who is going to take the market up to that level? Somebody has to take it. And if someone is taking the market up to that, that means he is a fool, because he takes it up to that of the resistance, allowing the traders to easily take a sell position. But moving the market, you and I cannot do it, because in the trading platform, even if you keep about 1,000 lots buy, market will not move upward. Only in the bank terminal they can keep a high level buy or a lower level sell and move the market up or down. So you have to understand why they do that. Then you will be able to understand the true hidden agenda of the players. Okay. And Asim. GBP opened today with a big gap downward. See, when you look into that of the lower time frame chart, then you will find that it has opened with a big gap and things like that. See, hardly from that of 1.5797, they dropped it to 1.5754. You just from the net change, you can see that from Friday close, they just only made 32 pips downward move. But it will appear as if when your candle is magnified, when the market is consolidating, automatically there is a property in the chart that the chart will get magnified. Then the red candle will look very big. And that is why I tell the people, don't look into that of the candle. When you find the candle is really big, you fail to understand how many pips of move has happened. If you see hardly about 5 pips, whereas a big candle has formed, it is meaningless to get afraid of such big candle. When the red candle is for about 60 pips or 50 pips, then you can understand, okay, they are going to make a massive drop. And that too after formation of 3 red candles, if you try to take a sell, that it becomes a visible sell after the drop. You are not going to get the profit on such trades. So, if you look into the candles, definitely you are going to be misguided, because there is a property in the candle, depending upon the range in which it is swinging, the candle will automatically, dynamically change the sizes. So, opened with a big gap. That is why he has used the word big, whereas actually from that of Friday close, the drop was only 30 pips. A normal stop and move can make 30 pips. Is this an indication that they will reverse quickly? No. The indications are not given that way, sir. And if you presume it that way, you just check every time whether they are doing it. I have been telling all along the type of moves are to be followed. No. And what is a big deal when they make a downward move during the opening time? They are not going to gain any, they are not going to see a lot of stops there, because most of the traders would have just liquidated the long positions if they are not seeing profit on Friday. Very few would have kept stop at a lower level and they would have been stopped out. Fine. But you have to understand when they are making such moves, and whether it is a false move or a stop and these things are very important. And also, in order to make the spread wider between the initial high and the low, they have to make necessary moves in the market. Only then the traders will enter into such currency pairs. So it is like a gambling den. No? In the gambling den, they have to, first of all, the main person will be standing there and try to play as if, even though there is no one is playing, and keep their own men and ask them to bet, so that when others bet, you feel you can also make a bet. take a chance. So similarly, they also make circular trades and make such moves, and so that when there is a small dip like this, and some traders might take a sell position after that drop or a scalp sell and things like that, and they may gain about 5-10 pips and afterwards increase the quantity of selling, and thinking that GBP could collapse straight away, it can go to 1.5725. So why not we take a big lot so that we will get 30 pips in about 3-4 standard lots, then take it. They make one big upward rise in overtraded condition. So that's a game. Then wine. Japanese starts around 3:30. No. Japanese session starts. See, the date starts around 0.00 hours. That is, you find the 24 hours market cycle. No? And the Japanese session starts around 00:30 GMT. I have given it here. They set the low and the high, subsequently make the moves and form around 3:30 GMT, the initial lows and the highs, for the reference. Then later on start making the moves. See, first of all, develop the patience to look into that of the live market quote page, without looking into that of the charts, without looking into that of the other parameters. You will be able to really focus on it, how they are making the moves. If you are distracted, it is next to impossible to learn about it. I'm not telling that my method is the best method, but any method you follow, you have to focus on it. Then, from Srinivas, okay. Does hat trick means a consecutive move for, no, hat trick means not, hat trick is a 3 sessions, no, or 3 times when they do similar things, it is hat trick. In a cricket and things like that, you would have noticed. And they don't do hat trick. That means what? More than 2 times they don't repeat. Hope you are able to understand. Then Chukiat. How high can we expect USD CAD? USD CAD is expected to go to 1.03, 1.05 slowly in this particular year. But there will be up and down moves. You have to keep it in mind. It's only a long-term levels they could reach. But in between you will come across volatile moves. That's part of the game. They have to trap the traders on either side. When the traders all turn bullish and they have to necessarily drop under odd, then induce them to liquidate the long positions at the lower level, then rise the market. Then how high will Euro CHF will go before running to resistance? See, according to me, there is no resistance and supports in the market. Whenever all the traders turn long, that is identified as the resistance level. Whenever all the traders started taking the sell positions, then that becomes the support as far as the players are concerned. And there is a saying in the market that when the strongest bull turns bearish, the market reverses. Same. So Euro CHF, they are expected to take it to 1.35 level in this particular year. Then ADI, okay. Okay, what would happen to USD yen in this week? USD yen is expected to rise it to 93 and more. I run into trouble with it, and it is likely to support low. See, you wait for the quick downward move, watch that they stop cutting the new low, and they have to make downward and upward stop, because they cannot straight rise the currency. Whenever they make a move of that nature, downward move, you try to watch and take the close your short positions with a small loss and turn long. When they make further drop, turn further long. You will be able to earn back the last money. Okay, before 3:30 GMT reading. No, before 3:30 GMT, they will try to make small swings. The session starts swings. in the market. At the time, sometimes the volume might be good if there is a breakout news from Australia and things like that. So you might come across Aussie and its crosses might be making quick moves during that time. And also New Zealand dollar. Then wham. How can one know that movement in price in last 30 minutes for live market put page? See, let them make the move in between the low and the high. We are not bothered. There is no need to know what 30 minutes they had done it and things like that. When they go above that of the initial high, try to watch the move. Whether it is a stop point or an extended move or an intentional move. Similarly, when they go below that of the low, watch it. Otherwise, if they stay near the low, not cut the low for more than 30 minutes, take a buy. You'll be able to really exit near that of the high. So the trading strategies and also the simple way of deciding on the entry and exit I have given it. There is no need to watch the 30 minutes candle. That's what I am trying to tell you. Because all these sessions, if you watch it, they are not of the same equal time frame. You have to focus on this, only then you will be able to understand. It might appear like a new method or a nonsense and things like that. But ultimately, you need to find that it is a man-made market and men have got certain systems to follow which cannot be easily tracked by others. Like a code word. So we have to break the code. Then Mohan Kumar, European session dip may breach today's low and not at the same time. Break the low or not at the same time. The gain may show new high. Yes, during the early European session, they are likely to breach the low set either in euro, most likely in euro and not in GBP, and then later on rise. And they are expected to breach the high they have set it. And do you mean USD yen will make a dip in European session? Either today or tomorrow, before making a big rise, they are expected to make a drop. In the case of USD yen. In white brown. We understand your method, it is extreme. Okay, fine, thank you. Basically, I want people to understand that the market is a very simple structure. Don't complicate it and don't try to use sophisticated analysis. Then your mind will be diverted towards such analysis and you may lose focus on the market. And as long as the market is concerned, the players can only make an upward or a downward move, nothing more than that. It is a man-made market. They can only make upward or the downward move. At a given time, if you see in fxstreet.net the chat, all the newcomers ask, can I sell euro or can I buy euro? Can I sell euro? Can I buy euro? They don't want to do any sort of analysis. They want somebody to say, then they wanted to just bet based on such calls. So that is a mindset. They want the easy money without understanding the market. Then the fear, even though the call would have been right, given in the chat would have been right, but they may not be able to make money because the fear is not being removed. So only after full understanding of the market, the fear will go away. It is something like when you learn to drive a vehicle, you have to develop the road sense. And once you develop the road sense, you find that you are able to drive it at ease. All the rules and regulations, you have to learn it. It is not a simple process. Your focus model is a fixed pattern for swing, dip or a change every day. No changes at all. See, I've been giving it for the past 18 years and the players have not changed because there is no other option available for them. That is the reality. Okay then. So, I explained to you that I'm not only focusing on the forecast, also we focus on the market reading. So don't simply follow the forecast and say that it has not come true or it has come true and simply appreciate, and later on say simply that your forecast has not come true. That doesn't help anybody. Forecast is nothing but a derivation. A statistical algorithm is used to derive what could be the possible moves in the market. It can be right or it may not be right. So always keep an open mind with regard to the forecast. Then trying to fine tune the forecast using the market reading. That's what I do by myself. I don't simply believe the forecast as such. I do the market reading and try to fine tune what could be the possible way the market could move. And the forecast, I use it as a guiding factor. Then still, I understand I am a human being, I have got my limitations, so all my readings may not be correct. I may miss something in between. So nobody can say that I am a knowledgeable person in this world, because knowledge is so limited as far as the individuals are concerned. Knowledge is an ocean. So we can make some mistakes somewhere. So in such a scenario, the trading strategy has to be applied, because as long as my trade is concerned, I can only protect or I can only limit the risk. Nobody else can do it. Somebody can say, you stop, but if I don't use it, I become the person losing that account. So I am responsible for it. So one has to understand that others can talk about forecast, others can talk about various models and things like that. Ultimately, when it comes to trading, you are the final judge with regard to your entry and the exit, accepting when the loss is small and maximizing the profit. All these things has to happen in your mind. And if it has to happen in your mind, you have to get rid of the market fear. So I shown the forecast and it is being recorded. So it will be displayed in a fixed rate under the archives. So you can just refer to it and find out how exactly the players are making the moves in the market. So today's forecast I have given it. So I take this opportunity to thank FX Trade for the cooperation and the help and the facility to provide this webinar, and also you people who have come with the interest to attend the webinar trying to learn how to perfect your trading. So try to learn it from everybody and try to see that what is the best method which can suit you. So I will come back again on 31st of January and try to review the forecast what I have given for this particular week, and try to analyze the forecast and also give the forecast for Thursday and Friday, and try to explain the market trading at that time, so that we will try to conclude how exactly the players intend to follow the long-term as well as the short-term forecast. Thank you one and all. See you on 31st.